Alright guys, welcome back to another video here. Today I'll be going through like um intraday type of trading using SMC, which is smart money concept strategy, to kind of enter trades on a obviously find trades on a lower time frame based on higher time frame structures. So first of all, what we always want to do is identify market structure on a higher time frame. So what I mean by that is that we always want to know if either the market structure on a high time frame is showing that there's a market is going down. So if we have this is a a bearish market structure. This is a bearish market structure based on the high time frame. Therefore, we're only going to be looking for what we call sells, because the market is in a bearish structure. So that's what we'll be looking for, only sells. For example, the same thing for buyers. Whenever we see that the structure of the market is higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, all we should expect is buyers taking absolute control, meaning that there's momentum. And obviously, same thing. So anytime we see the market, we hear or see anything market structure, it's all about identifying whether we have a structure like this or a structure like this. So that's pretty much what market structure entails in. So it's all about identifying where there's a point of interest, where we can buy or where we can sell. It's very, very important to know these things as a trader, as these are what will help you understand the primary thing, the primary basis of trading in terms of the market structure on a higher time frame or low time frame. So this is sell and this is buy, because we know that price is heading upside. So therefore, buyers are in control, meaning that the market structure is a bullish structure. So therefore, we will all be looking for buys to the upside. Same thing for a structure like this. We already know that the market is heading to the downside. So therefore, all the trades we're looking for is bearish trades or sell trades. So yeah. Now, enough of all of this. Now, secondly, we always want to know if there's news coming, because these are very, very key aspect of the market in terms of, yeah. Secondly, we always want to know that if there's news coming in the market which will affect market price action. So for example, let's go on the calendar here. So for example, on Tuesday we had for example, if we're looking at the market structure of the New Zealand currency, on Tuesday at 8 p.m. we had the official cash rate, we had a monetary policy regarding interest rate and all these things coming out on 8 p.m. So therefore, if I'm analyzing the market for some trades on New Zealand or any currency pairs that are trading in New Zealand or has an impact in New Zealand, I would be very mindful around 8 p.m. because any trade I can take can either affect me whether positively or negatively. So it's very, very important. Another example could be you're trading the euro currency where, you know, or the pound, for example, or the US dollar. So it depends on the currency you're trading at. You need to understand and know that if there's fundamentals that can affect or can go against your trade or can hit your point of interest and maybe just go past the area that you're looking to sell or buy, and obviously which can go past your stop loss and obviously affect you. So we don't want to do that. We always want to minimize losses as traders. So that's the second part. Now, the liquidity, what I mean by liquidity is basically areas that is high probability for price to hit and bounce to the upside or bounce to the downside. So for example, let me just draw. Yeah, so for example, this could be a bias side of liquidity where we can find a point of interest for buyers to go and touch. Obviously, institutional traders will place, and normally it should be like what we call an order block, which is like a last candle. It's like a last bias candle on a bearish trend before the push downwards to the downside in this trend that we have, for example, here that I've just given. So what would be a liquidity side for this trend would be a bias liquidity because price is going up to find a premium area where they can collect all the pending orders that institutional traders have left here to continue to the downside. So in other words, that's what we call the liquidity side. So yeah. So now let's show some real examples. Just give me a. So now this is an example of a trade that I analyzed, and I analyzed on Wednesday for intraday trading, like a same day kind of, you know, in and out type of trades of 100 pips on Aussie or Australian dollar. So starting off the hourly, first of all, we're already doing the market structure is um is bearish. We can see, quite clear here. However, since that higher time frame takes longer to show the change of direction or change of structure, we tend intradays mainly focus on lower time frames, so we tend to use an hour or the 4 hour just to kind of confirm the current structure of the market in order to have a guided way to trade. So since obviously, if you take a look at the bottom, you can see, you know, that price obviously we're having high lows, lower lows, high lows, lower lows, high lows, lower lows. However, once we got to this area, we start to see a change in direction. Once we had this order block break past this area here, so which is the first break of structure or change of character, meaning that we was in a bearish structure. However, the price action is changing from sellers to buyers with this first break of structure. Now Now, with this happening, I decided to go on a smaller time frame to fully understand what's happening. So then, obviously, I started to see a first break of structure here, second break of structure here, and a third break of structure here, fully breaking these two levels, which are the bearish levels that we have. So, this is telling me that we are currently going to be in a short phase of buyers, since there's a lot of liquidity that is left to be filled here. For example, here we have order block here, we have an order block, and we have an order block at the top here. So, which tells me that the market is oversold now. Price needs to find a premium area again for it to sell back down. That's how the market works. So it's literally institutional is finding the premium price at the top where they can sell higher and buy low. That's literally how market works. So so in this example, since I already understood that the market structure started to shift from sellers to buyers, I started to find I started to look for areas of interest where price could hit and change or continue the direction to the upside. Since I know that price is looking from a premium area at the top to hit before a continuation to the downward side, I started to look for areas of interest. So first of all, I decided to look at this area here, and I clocked that this area was mitigated by when price came to touch it, went up, closed above this high, obviously creating a new high on this current time frame that we have on the 15-minute, which is a smaller time frame compared to the 1 hour and the 30 minutes. So once I realized that, price breaking this, touching this, breaking this, I started to identify areas where price could come down to test before massively buying up to the upside. So this is where it became interesting, because now people say, oh, why do you not put your order block here, or why do you not put, because ideally you want to put your order block where price fully shot up and break the last high of the trend, or of the structure that we have. However, in this case, we saw that there was a news event coming out on, and since I knew that obviously we breaking structures, each and every time, creating breaking structure, and obviously I'm identifying all the blocks as we move on, I realized that, well, we've broken our structure here. We've come down and tested this order block. We're breaking this structure here. Now I'm expecting price to come down smoothly and touch this order block here. However, we have two order blocks. So we've got this one here. So we've got this order block and this order block here. Because price, obviously, we normally tend to go for the order block which commenced that run to the upside and broke the highs of the last trend. However, in this, we understood there was a news event that was going to happen at the same day at 9 in the morning. So, and when the news came out, it was negative for the US dollar, which is good for our analysis, because what this tells us is that price will most likely continue to the upside due to the heavy confirmation from the fundamental side. So our technicality is confirming buyers are in control, you know, and our fundamentals also confirm this. However, we need to understand that I need to find a more clear order block, which is why, guess what? I went on a 5 minute time frame, because now I know once news came out. So, for example, as we can see here, once the news came out, 45, well, guess what happened? A lot of people will start buying here. But guess what? Price push up a little bit, creates a manipulation, you know, as we can see all these stop losses here and all these stop loss right above here, because a lot of people that will buy here will probably put a stop loss here, because they think, since the news will come out concerning that the US dollar has a negative PMI, well, guess what? I'm going to jump in the market and get into market order, because it's good for the Australian dollar. Well, that's not the case, because we still have imbalances here that needs to be filled in the market before a entry, or before the actual bullish run commences. So therefore, I waited for the market, you know, because I already had my order block, so I already understood, well, whether it goes up or not. I believe market will come and touch this order block that I have here, because this was the last bearish candle before the bullish run to break this high that we have here. So guess what happened? So price comes down now and it touches it, goes in a draw now for just a bit and shoots literally up, as you can see. Shoots right up, and guess what? Keeps going up, keeps going up. And as you can see, that spike there, you can see that spike there. Literally, so this is right before the New York. The New York is coming, the market. Because obviously, during this time, obviously, price is still kind of trading sideways and all these things. But as soon as the New York market opens, that's what we start seeing. We start seeing, you know, break of structure, shoot up, because of, guess what? The New Yorkers have entered the market, causing a break of our last high to the upside to touch our point of interest, which we had here and here, because there was a lot of liquidity that needed to be filled. And obviously you can see price beautifully touched our take profit. So that's just a another breakdown, that video to kind of show you how the intraday works on smaller time frames by identifying your boards. So it all comes down to the 3 steps that I had, which I showed you. Let me just close this. Yeah. So it's all about, first of all, identifying a market structure on the and high time frame and lower time frame, most importantly, because this will give you an idea of how the market is moving, and finding any news that might affect your currency that you're planning to trade, and identifying the liquidity side, whereas meaning that identifying order blocks and identifying areas that price is at a discount when looking for buys. Oh, price at a discount when looking for buys, and price at a premium when looking for sales, like this area here that we have. So it's just all about identifying places that it makes sense to the trade you're looking to take, whether it's a buy trade or it's a sell trade. Now, let me just give another example here. This is another example that shows you, and obviously, since the news came out was bad, again, this is another order block that I started looking at, because I realized that we have a double bottom here. Price breaks it, goes up. Okay, we're seeing a high, high, low, high, 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 low, high, low, which is good for the market. But as soon as the news comes out, I realized that there's a lot of what we call imbalances that are left here. So price needed to come fill this imbalance. So guess what? This is the order block, the last bearish order block before the price pushed to the upside. So I set a buy limit right here, put our stop loss just right below the wick on the low of the bearish order block, and take profit here, there, as you can see. So, you know, so you can see here, break of structure, and then we have all these liquidity that need to be filled, need to be grabbed in terms of a imbalance that's here. So as the market approaches here, it touches it, goes up, confirms our take profit one, price comes down, collect more liquidity to the upside to confirm take profit two. So that's literally how the market works, guys. It's just all about following these two, three um, methods, and understanding how market structure works, identifying fundamentals and the liquidities to your advantage, as these 3 things are the most important things that would help you to trade efficiently and not make mistakes on using intradays and um intraday's trading. So yeah, that is your boy. That's my video of today. Like, comment, share, subscribe. Let me know what you think in the comments, suggestions and any video, any things that you guys want me to drop down. I'll be able to do that. And it's been your boy FMA. I know I need to be consistent, but yeah, guys, like, comment, share, subscribe, share the video, do all the nice things, and let me know if you want more of these type of contents. And